C3.AI is an enterprise AI company that helps businesses improve performance by utilizing proprietary company data with artificial intelligence. The business is similar to Palantir, but with a fraction of the success of Palantir. That said, C3.AI is accelerating revenue growth and increasing customer adoption. Could that make it an excellent AI stock for long-term investors? I'll answer that question in this video. Looking at the company's revenue growth, profit margin, cash flow, I'll weigh those against the company's valuation to determine if it's a buy, hold, or a sell at current prices. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Starting with the company's revenue growth, you'll notice the acceleration here. Revenue growth was flat in fourth quarter fiscal year 2023 and started to accelerate thereafter. 11% in Q1 2024, 17% in Q2, 18% in Q3, and 20% in the latest Q4. Investors like myself love to see accelerating revenue growth. That second derivative is important for companies trading at expensive valuations like C3.AI is. C3.AI is currently trading at a forward price to sales ratio of 6.3, which is expensive when you consider the valuation of a company that's not generating profitability on the bottom line. And growth has been under concern, even though lately they did accelerate revenue growth. That was a recent phenomenon, and prior to that, revenue growth was under question. C3.AI is forecasting fiscal year revenue of between 370 and 395 million, which would be revenue growth in the range of 19% to 27%. At the higher end of the range, that would be further revenue growth acceleration for the AI company. Even at 19%, it would be an improvement from 2024 revenue. So revenue growth expected to continue for C3.AI. However, so are losses on the bottom line. Management forecasting losses between 95 million and 125 million for fiscal year 2025. That would mean roughly 1/4 of the company's revenue would result in losses. So 1/4, 25% operating profit margin, negative operating profit margin, and this is non-GAAP. So this is adjusted. If you were to use GAAP numbers, they would be considerably worse. Speaking about profitability, what I have here is a chart of the company's operating profit margin and its cash flow from operations to sales. And you can see the operating profit margin had been moving in the wrong direction until a recent turnaround, but even that turnaround wasn't that significant. Its operating profit margin came in at negative 102% in the most recent trailing 12-month period. That's only slightly better than where it was in mid-2023, but at least the company had stopped this worsening trend, and it's now at least heading in the right direction, albeit very slowly. Cash flow from operations is still negative at 20%, but it's showing much better improvement in this metric. The main difference between the two metrics are stock-based compensation, and the company does use a considerable amount of stock-based compensation, and it is diluting shareholders aggressively. So those are things to consider when you're evaluating C3.AI stock. C3.AI had been undertaking several pilot programs in the aim of signing these customers in the future. You could think of the pilot as a free trial where C3.AI goes into a business and makes its case, tries to demonstrate what it can provide businesses and enterprises, and tries to get them to then sign up and become a customer, become a paying customer. And so you can see the pilot accounts here for the company and the relevant size of the company. They're generating significant pilots for these large account size revenue, large revenue businesses. And for the most part, C3.AI and Palantir, for the matter, target businesses with large revenue, recurring revenue streams, or large annual revenue, because this service is not cheap. And, C3.AI is, of course, less pricey than Palantir, but it's still not cheap. And so you need to be a company of considerable size to reap the benefits of investments in this kind of software. And so you can see them skewing towards the larger businesses in their piloting efforts. Now, this is a strategy that has worked extremely well for Palantir, and you can see it working for C3.AI in how it's accelerating revenue growth. So this is a type of service where once a business sees what C3.AI can do, then they become more interested in buying the service, because when they just get a phone call trying to sell them the business, trying to sell them on the service, it's not that convincing. It's a complicated process, and it's difficult to highlight what you offer a business without actually going in there and showing them, demonstrating it on the company's own proprietary data. And then the company can see, oh, wow, we can lower our operating expense by 4%, or we can increase our revenue by 2% just by using this software. And when you're talking about 4% and 2% for a $100 billion company, those are big numbers, right? 2 billion improvement in revenue just by using the software. That's a no-brainer decision. And so if you can demonstrate that kind of improvement, businesses are going to be calling you all the time, trying to get you to deploy your services. Now, for the longest time, I have not had C3.AI rated as a buy. I've had the stock rated as a hold, and I last updated that on May 30th. My main concern with the company has been the lack of profitability and the lack of improvement in profitability. As I often say, I don't mind rating stocks as a buy, even if their operating margins are negative, so long as they demonstrate sufficient progress towards profitability. That makes me convinced that they will eventually reach sustainable profit levels. Haven't seen that with C3.AI. They have stopped the worsening trend. That's, a step forward, but they haven't demonstrated sufficient progress improvement. You see this very minor improvement in profitability. That's not enough when you're losing this much money on the bottom line. Now, the company does have a pristine balance sheet. They have several $100 millions in cash and zero debt, but they've got to generate profitability or demonstrate progress on profitability before I would be willing to recommend it as a buy, especially when you're trading at such a premium valuation, a forward price to sales of 6.3. So to update my recommendation on C3.AI stock, I'm reiterating my hold rating and informing investors that if you're thinking, is it a buy, hold, or a sell? For me, I rate it as a hold. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.